Michael Burry went all in one stock, and this stock is Estee Lauder. The stock is around 200,000 shares, 100% of his portfolio, $13.2 million. Now, I'm going to be honest with you guys. I don't believe this is his entire portfolio. He likely has some international stocks, some options, which won't be displayed in his 13F. But as of his latest 13F in his US portfolio, he is 100% into Estee Lauder. And Estee Lauder, I have a long history with the stock. It's down 53% over the last year. The last 5 years have been a disaster. The stock has topped at $360 per share. It's now trading at $63 per share. And I've been saying it is a value trap for a while. But the stock right here might be getting interesting. And many of you guys know Estee Lauder. You're likely familiar with brands like Joe Malone and Michael Kors and many different brands that are owned by Estee Lauder. I'm sure many of you guys can recognize some of those brands. So the question is Estee Lauder presenting some kind of a generational buying opportunity at $63 per share? Or maybe the stock is still overvalued and maybe it's going to take a very long time for the stock to recover? That's what I'm going to answer in this video, and I really hope you enjoy it as always. Now, Estee Lauder is facing the same exact problem that Nike and many other retailers and other kind of, you could say, discretionary kind of companies have been facing. And this is rising inventories. The main reason why all those companies faced massive rising inventories is because of the massive pumped up demand that came after COVID. During COVID, people weren't going out. They were collecting stimulus checks. So people had record amount of savings, and they were spending those savings on Jordans, on Nike shoes, on Estee Lauder perfumes and makeups. And those companies believed that this pumped up demand wasn't temporary. They believed it was permanent. So what did they do? They ramped up inventories and they ramped up production, anticipating massive demand that's gonna last for many years. But that didn't happen. It was pumped up demand. The demand dried up in 2022, and this is when those inventories peaked. And whenever you have inventories, what do you have to do? You have to lower prices and increase marketing to get rid of those inventories. And this is what Nike, Estee Lauder, and many of those companies had to do. And inventories have declined. They're sitting at a much better level here, but they're still, relatively elevated to where they were before 2020, but the company did a good job on that. Now, if we look at the last earnings report, everything has pretty much declined. Everything is down. Net sales is down. Organic net sales is down. Gross profits is down. Gross margin is down. Operating income is down. Operating net margin is down. Net income is down. Earnings per share is down. Everything is down. Everything has declined. I mean, it's just an ugly report. I mean, I'm not seeing anything positive from this report from Estee Lauder. It's really, really bad. Now, whenever you have such reports, whenever you have something like that happen, you have to try to figure out if this is a problem within the company internally, like if this is a branding kind of problem, which in this case it would be very damaging, or if this is maybe just related to economics, where we just have a weaker consumer, the Chinese consumer is still weak, Estee Lauder has exposure to China, or is it just a branding problem like from the company, or is it an outside problem? Now, you normally have to wish that it's not a branding problem, because branding damage takes a very long time to recover, and some of those brands never recover. And for us to determine that, we're going to look at the categories of Estee Lauder and try to see if there's any kind of strength and weaknesses in their categories. For example, brands like LVMH, they have some very good categories that are actually going up and they're actually increasing. But they have categories like the wine and spirits, which is in alcoholic beverages. Alcohol consumption has been declining, especially amongst younger people. So you have many kind of alcohol stocks like Daigou and many others. They've been declining, and it has weighted on LVMH sales. And this is how you could determine if it's just a brand problem or if it's something on the outside. Now, if we look at Estee Lauder, the skincare revenue is down 16.8%. This is a massive decline. If we look at the makeup revenue, makeup is down 11.3%, and it hasn't been doing well over the last quarter. We look at something like fragrances. Fragrances is extremely weak. It's down 24%. And we can also look at hair care. I mean, hair care is essential stuff. This one is down 27.2%. So that would tell me that this has something to do within the Estee Lauder brand itself. And by the way, I'm using FinChat to come up with the fragrances and all the categories over the last few quarters. I couldn't find any website that would show me such categories. And if you want to try it out, they give you 2 weeks of free access using my link in the description. So you're not going to lose anything if you just want to try it out and pull up some charts. But for Estee Lauder, I'm not the only one that believes this is a branding problem. The CEO himself, which he just came in January to supposedly turn the company around, he also believes it's some kind of major issue. He said we lost our agility. He said that. He also said we did not capitalize on the higher growth opportunities quickly enough in channels, markets, media, and prestige price tiers, nor fuel new consumer acquisition aggressively enough. Adding that the company also hasn't innovated enough, which often put it behind trend. This is a very honest CEO, and he's extremely right about what has happened at Estee Lauder. And once you're behind trend, it's very, very hard to recover. I mean, the company did introduce something called Beauty Reimagined, which is some kind of plan for innovation to take back market share and all these things. And it could work. But I've seen it many times before. Once those dinosaurs, those kind of brands, they fall behind trend, and new companies emerge into an aggressive industry like the beauty industry, it's very hard for those dinosaurs to gain back their market share and restore their brands and innovate again. It's not impossible, but it's extremely, extremely difficult. And this CEO has to pull in mission impossible to restore Estee Lauder to what it used to be. And if we look at their outlook is still terrible, 8 to 9% decline. Again, I'm not seeing any improvements anytime soon. Now, if we look at the P/E ratio, surprisingly enough, the company is still trading at 32 times forward earnings. 32 times is extremely, extremely expensive for Estee Lauder. And this stock, I will never understand how it was trading around 45 times or 47 times earnings in 2021. Now, this is a glitch. It never went to 81 times, so it's all messed up over there. But here, it went to like 44, 43. The average is around 37. I will never understand why Estee Lauder was trading at 37. I wouldn't pay more than 20 times earnings for something like Estee Lauder. But I guess people believe there was a quality company. Even Terry Smith, the massive quality investor, he owned Estee Lauder. And I believe he sold the stock, and he made the right decision, in my opinion. But 32 times earnings is expensive, and the analysts are extremely bullish with their outlook. They believe Estee Lauder is going to go from negative 2.4 on earnings per share to positive 1.5 and positive 2.2. To me, this is extremely optimistic, but this is what they're betting on. And in this video, you're going to know that even if we're going to bet on the best case scenario, Estee Lauder is still a little bit expensive. Now, if I'm going to take the analyst estimates and assume they're right, although I highly doubt it, those turnarounds, they take a long time. But assuming they do pull off mission impossible, they go to 2.2 in earnings per share in 2026. I normally use a 5-year estimate, so to 2029. I took the $2.20, I put it for the next 3 years, which is 2029, 5 years total. Then I put in a 15% growth in earnings per share. So after 2026, I'm pricing in 15% earnings per share growth. This is very optimistic, but we assume that the turnaround is going to happen. Now, if the turnaround was successful, the company should reach $3.35 in earnings per share by 2029. And we're going to take the 335, okay, and I'm going to time it by the current P/E ratio of 32 times. 32 times is extremely overvalued, but let's assume this is a quality company and it holds 32 times for some reason. I don't know why, but let's just assume that does happen just for illustration purposes. We time it by 32 times. This is $107 per share like 5 years from now. If we divide it by the current price of $63, this is around 70% on the upside. This is nothing. I mean, it's just extremely overpriced, and it's not worth the risk reward. Now, if I wanted to buy Estee Lauder on this scenario, and I want to get a double over the next 5 years, I would have to buy Estee Lauder around $53 per share. So $53 per share or below, I would get interested. But being honest, even at $53 per share, I wouldn't buy Estee Lauder. I think the turnaround will take a long time to happen. there's way better opportunities. I would buy Nike versus buying something like Estee Lauder. There's way better, companies in this market. Google is trading at 17 times earnings, way better opportunities. And I'm not saying how Estee Lauder is a buy here. Even if I use the mean PE, because it's a quality company again, and I use 37 times earnings, this is 122, and if I divide it by $63, this is only 93% on the upside. So I'm not getting a double even with the most optimistic case scenario. So I still believe Estee Lauder is not a buy. I wouldn't be surprised if Michael Burry sold the stock already, because this 13F ends, you could say, I believe, in late March. So in April, the stock went down even lower. I wouldn't be surprised if he cut his loss and moved on. That's what Burry normally does. So I wouldn't be surprised if the next 13F he sold out of Estee Lauder. So I wouldn't buy it because Burry did. I think it's overpriced. I think there's way better opportunities in this market. So this is just my opinion on Estee Lauder. Hope you enjoyed it. Not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.